It's been a difficult year for leadership companies as companies grapple with high inflation and shaky economic backdrops. But what can investors expect heading into 2024? Let's start with Ted Pick. He's going to take the helm at Morgan Stanley on January 1st here. This is one that you've been tracking in this transition here.
Yeah, some of the stories are starting to pop up on Ted Pick. And of course, that announcement was made a couple of weeks ago. Really cool, really helpful, I should say, piece by the FT looking at what some of the challenges that Pick has to confront looking into next year. Of course, Ted coming up, I would say, more through the trading and investments banking side of the business. Now, Morgan Stanley, under outgoing CEO James Gorman, who is staying as executive chairman for 1 year, he has really positioned Morgan Stanley into wealth management. So I think it's going to be important to see how Pick manages really what is now seen as the growth driver inside of Morgan Stanley in wealth management, just given the acquisitions he has made. But Brad, also let's keep in mind that Pick takes this position. Morgan Stanley shares are down about 12% since December 8th. Really continue to be under pressure, one of the more underperforming stocks in the big banking space, as our very own David Hollerath, our senior banking reporter here, has been writing about. So this stock is not doing well. Some concerns of Pick can be like Gorman, who has really driven a massive turnaround since he took over more than a decade. So it'll be interesting to see if he can get through that, and a lot of regulatory issues over at Morgan.
Yeah, and to this point, I mean, you've had a lot of the banking executives have to continue to make trips to Washington, D.C., discussing what Basel III endgame could mean for capital requirements here. It'll be interesting to see the tone that Ted Pick needs to strike with a lot of those regulators going into next year as well.
All right, next up we have Starbucks with its new CEO Laxman Narasimhan looking to orchestrate a turnaround plan. And Brad, I continue to be very focused on how Lax handles the push to unionize Starbucks stores. Now, Starbucks in typical form has, I really think, has brushed this aside. As someone who has covered this company for close to 20 years, first under Howard Schultz, they typically push a lot of these issues to the back burner. They think because they're Starbucks, it's their world and everybody gets to live in it. It's not working like that. It has not worked like this in terms of the union issue for more than a year. I think Lax has to finally figure this out, has to offer potentially some concessions, because the alternative, as you see on the stock chart, this union issue will continue to weigh on Starbucks shares for the foreseeable future if he does not get out in front of this finally once and for all.
Plus, internationally, you've got to think about what the expansion plan looks like and what Laxman is going to continue to push for as of right now. I mean, we just came weeks off of what his international scope and what was perhaps defined as a cold brew type of employee memo that he put out from the desk of the CEO, and essentially looking out at some of the exogenous risks that exist. Sure, they do exist, but at the end of the day, it's also the mark of a leader in those times, how you're bringing your customers, your employees, the rest of the management team through that and continuing to grow out the business and the prospects there. And I think China is one area where investors have continued to ask the question of where will they ensure that they maintain the market share they've developed while also improving the brand sentiment within that particular region as well.
I'll just say real quickly here, Brad, before we jump to one other one. I just didn't like that letter from Lax that you mentioned. You know, it looks to be that he wants to continue using that Starbucks blog like Howard Schultz long did, weighing in on social issues. I think for Lax to turn around investor sentiment, just be a good Starbucks, be a good operator, drive better results, be good to your employees, and let the results speak for themselves. You don't need to hop onto that Starbucks blog and try to be Howard Schultz light.
Yeah, well, yeah, exactly. Howard Schultz eventually, when he did leave Starbucks, eventually went on to go into politics for a brief stint, and very brief. Also here, we got to finally talk about Elon Musk. From X to SpaceX, there's a lot on tap for 2024. I think investors just want to know what is going to take place in 2024 that Elon Musk just places so much of his time around, because that's going to have a broader overhang on what the stock actually does, what the margins look like. Is he ready, honestly, to continue to cut in order just to get some of the Tesla models into driveways, into garages, into charging stations as well? Where does the network grow out in terms of the superchargers? Because that is the overhang for the amount of people who are looking to purchase or even finance. So where financing is even perhaps rosy, I dare say rosy, because financing a vehicle, financing anything right now, not the most rosy environment. But in the event somebody does still enter into a purchase of that vehicle, where do they then look across that network and feel confident? Because that's the hang up for a lot of people that were looking to buy an EV right now. Demand waning, a lot of the vehicle companies have had to pull back on some of their ambitions that they have as well.
Among many things I'm watching, Brad, really is how does Tesla perform potentially in another year where EV prices continue to fall? The used values of Tesla vehicles continue to decline. You also have of GM and Ford continuing to roll out large number of EVs in this country and do so very aggressively. So lots of concerns here, I think, on Tesla after a pretty good year.